This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we have a fantastic guest, fantastic, timely subject. So the other thing is somebody says you thought 2020 was bad. 2021's off to a great start. And so that's why I want to be very cautious on the date so that when you say something, you have a relatively starting point. Any comments, Ken?
Well, I'm very, very excited to have Raul Paul with us today. He's the founder and CEO of Global Macro Investor and Real Vision. I've watched many of your videos and learned something new every single time, and I'm really fascinated, and thank you for your time to be with us today.
It's great to be here. Really looking forward to this.
And he's hiding out in the Caymans, which I always think is interesting, where people are spending time these days.
Yeah, it's like James Bond lair.
That reminds me of that movie with Tom Cruise, The Firm. They went to Cayman, didn't they?
Yeah, everybody here hates that.
So before we go into the global macro and all this, we had this... I don't know how, I can't describe it. I mean, to me, it's First Amendment violation. You know, I mean, Parler's taken off. Trump, they censor the President of the United States. They stormed the Capitol and they blame him for it, but it's okay to burn down a city. You know, I'm sitting there going, ¿Qué pasa? You know, what is happening? So as a person who, you're not American and you're sitting outside on the shores here, but you understand the macro view, and we're not politically correct. You can say anything you like. We just won't delist you. But anyway, what do you think? What is your view today? Again, this is around January 15, 2021, and so things are changing so rapidly. What is your viewpoint on the world, the U.S., and the economy?
I think the easiest summary is to call it a shit show. I mean,
that's a good, that sums it right up.
Ooh, that's scientific.
Look, it's very... I don't really want to get involved in the politics of the United States because it's far too hot a subject anyway. So I look at it from a macro lens. What does this all mean, right? So what it all means right now is, so Biden comes in next week or whenever it is. He fought on the COVID virus, and therefore he's likely to have to do something about it because that's kind of what he promised. So again, whether we like it or not, our job is not to impose our wants. You as American voters can do that. But from an observer, I'm trying to look at probabilities. What is the probability that the US goes into stricter lockdowns as Europe is doing all over? Extremely high. Again, whether we like it or not, those are the facts we're likely to be dealt with. So if we think of peak virus in the US and the fact that the political consensus from the Democrats is going to be about more restrictive measures. And again, we've seen that all over the world, whether it's South Korea, whether it's Japan, we're seeing it in China again, and we're seeing it all across Europe. So the market right now is having a huge bet. It's maximum short the dollar, it's maximum short bonds, it's maximum long equities. So they're expecting utopia. Straight to reflation. Don't worry about the biggest recession any of us have ever faced in our lifetimes. There's no overhang, everything's straight to normal. Having done this for about 30 odd years, I know that almost all recessions get this phase in the middle, and I call it the hope phase, where people extrapolate a future that is probably unrealistic at that point in time. So I worry that everyone's going to have these bets wrong. And again, there's no certainties in this world. We deal in a probabilistic world, and I worry that we probably got some more downside again from the stock market. We've probably got the fear and a real economic slowdown that's not priced in. There's more pain to come on Main Street. There's more pain to come from small businesses. There's more pain to come in unemployment. That's not going away yet. My guess is it starts to improve in the second half of the year and really picks up after that. So I'm pretty anti-consensus here. Consensus is everything's fine. My view is it looks fine on Wall Street, but when you speak to any friend of ours who owns a restaurant or a bar or any service industry, I mean, they're decimated, and it looks like more restrictive measures are coming, so it's only going to be worse for a while.
Well, anyway,
I can't argue with that. I don't see the silver lining anytime soon.
No, but the outcome is, Okay, so given that set of facts, what are the government going to do? Well, we're already hearing about a larger stimulus than the one that we've just had. So there's a larger stimulus in the making. If the market falls, if economic weakness continues in the way that I think, the probability of a larger fiscal stimulus goes up. And the probability of the central bank being involved goes up. So one of the big themes that I'm sure you guys have been following, as I've been following, is the kind of devaluation of fiat currency, the excessive printing, and what that does to hard assets. And that, I think that theme is, gold's been trading sideways for a period of time now. But my guess is all of this kicks back into gear again once people realize that, okay, we're actually not through this. There's more stimulus. Europe needs to stimulate again. Maybe Japan needs to stimulate, and a bunch of other countries as well. And that plays into the hands of many of these hard asset trades that we've all looked at.
So can I ask you an off-the-wall question, if you don't think, what I'm watching, is you have Yellen, who is Secretary of Treasury, and you have Powell, who's the Fed. Do you see anything in that? Because what I see is the marriage of the Treasury and the Fed. I thought they were separate.
That's coming without question. So the central bank digital currencies is a big movement. The IMF have told us about this. So have the ECB, the Bank of England, the PBOC in China. Everybody's talked about it. And they're essentially talking about the fact that monetary policy has run its course. So the only way monetary policy can work is if it's tied to fiscal policy, which is the MMT style discussion. That's coming. Again, whether we like it or not, it's coming. So I think purposefully to have Yellen in means that those two offices basically become more linked, because if not, the central banks can't do anymore. There's just keep printing money for what? To make the 1% richer and doesn't help anybody else? That doesn't work. What you need is stimulus that helps those restaurants that our friends have, or the dry cleaning business, or whatever it is. And there's no way of doing it because the banks won't lend.
So let me say this then. Isn't it helicopter money? I mean, they can't, if you don't have a good balance sheet, you can't borrow any money. But they need to get the money into the hands of Joe, Mr. and Mrs. Public. So by Yellen and Powell marrying up, they can bypass the banks and just inject cash straight to mom and pop. I mean, is that how you see it? That's how I see it.
Exactly right. And that's what central bank digital currencies do at core. They create a banking function from the central bank that they could say, hey, Robert, I'm going to stimulate you this much, and I'm going to charge you a different interest rate. So you could have a negative interest rate because you're a saver, and a student could have a positive interest rate. All of this, the behavioral economics of monetary policy and the combination of monetary and fiscal, is all coming over the next few years. So we're going to see a massive change. And in the end, yes, it is helicopter money. There's no way around that.
So how does the central bank digital currency, what does that look like? How does that play out? And how does that affect like Bitcoin and gold and silver?
Well, it's basically twofold. One is this need to extend monetary policy in a way that might work, because they're kind of acknowledging it doesn't work. The other thing is they're acknowledging we live in a digital world. Everything we do, we're talking over Zoom now, and it's like sitting in the same room, right? The world has changed. We're totally digital. So you need a payments platform that can instantaneously move money around. Also, they've decided that they want to be able to instantaneously create stimulus or withdraw stimulus to different parts of the population. So central bank digital currencies allow all of that. But what it also allows is on-ramps and off-ramps for the digital world of Bitcoin and the other cryptocurrencies, because it becomes seamless, very quick. I can transfer money out of dollars straight into Bitcoin, straight across to yen, and all of that world flows. So it does give us this life raft, which is Bitcoin, that we can use as our own reserve currency, much like many of us have used gold for many years. And, gold has always formed part of the system. That's not going away. But Bitcoin is the kind of new elephant in the room that's really adapted to our modern environment. And it makes it super, super easy to use.
Well, as I was saying to you before they got on this thing, is I listen to a lot of guys on YouTube, and like Anthony Pompliano, and of course Peter Schiff, who trashes it, and all the other characters, Max Kaiser. But you're the one who pushed me over the line, because I'm sitting there and I said, well, Raoul is you're a hedge fund guy and all this stuff. But when you said there's a wall of money coming into Bitcoin. When you said that, it struck a chord in me. I said, all this money have to go somewhere. And so that's why I want to thank you, because you made me very rich. So thank you.
It's exactly that. I mean, I'm very lucky because I sit in the middle of, a big public audience, but also I'm at the core of the financial system. I know kind of everybody involved. Right. Everybody is doing their due diligence on trying to set this up. It's easy for you and I to buy Bitcoin. We just set up a wallet and transfer some money. But for an institution, it's actually difficult, because how do you account for it? It's a bearer asset, which nobody's used to. And also for accounting systems and audit functions, really difficult. But that's all being solved right now. There's a bunch of companies doing that. And so all of these companies, the first were the family offices, because it was easier for them. But income, we're hearing BlackRock talking about it. Fidelity have made a big play in the space. We see Mass Mutual, we've seen corporate treasurers, and that's just the start.
So that's the wall of money coming in, because there's too much of it.
Institutional money. It was retail money to start with. 2017, the bull market in crypto was retail. What's great is retail is already in this trade, and we're going to get to front run Wall Street. That never happens. Wall Street front runs the individual. This time, the little guy gets his opportunity to front run Wall Street.
Well, we just interviewed Simon Dixon, and he says it's the geeks win this time. So
yeah, it's the geeks, the retail dreamers, everybody. They get their chance, which is fantastic.
If I could plug my book here, I wrote this book, Fake Money, Fake Teachers, Fake Assets. And I said, gold and silver are God's money, because, Kim and I have tons of gold and silver, real stuff. And I started a gold mine and a silver mine. That's how much I'm into it. And then I call Bitcoin people's money. And it's the network, right? I mean, I think that's the thing that's hard to understand for people, that it's not centralized. It's a network of people watching out for their own money. I mean, is that kind of what the network means to you?
Yes. Now, think of network effects, which is a thing that we've all learned about from Facebook and Google and Twitter and all that stuff. What that means is the value of a network increases exponentially with the number of people using the network. What Bitcoin actually is a distributed network of money. So it's got all this perfect behavioral incentives. On Facebook, the incentive was you can speak to your friend that you saw at school, right? You can keep up to date with your friends. Or Twitter might be, we can connect all of these smart people together and learn from them. Bitcoin is actually, the more people you bring into the network, the more the value of the money goes up. The behavioral incentives are super powerful. It's probably the world's most perfect behavioral economics incentivized program ever created.
It's called self-interest, right?
It's self-interest.
Yeah. I'm going to watch my money.
That's why it gets this religious fervor around it, because people realize the more people you convert to your cryptocurrency, the more value it has.
It's getting very popular. Institutions are coming on board. Governments are coming on board. It's like everybody wants to get in the game, but from my understanding, there's only so much available. Is that correct?
That's right. I mean, there's 21 million Bitcoins, but there's only 650 mined per day. Now, right now, PayPal and Square alone, who have it on their apps, take all of the daily supply.
Oh,
so
God.
Yeah, and then we've got the Grayscale trust. And then we've got these institutions trying to get in, and the retail guys adding to their trades and getting in. So there's no supply. It's a crazy situation where there's literally no supply. So how does a sell-off? We had a big sell-off the last couple of days. So January 13th to 15th. What is that? That was just leverage traders getting stopped out of positions, because a lot of people use a lot of leverage in this space because everyone wants to make super amounts of money. So people who borrowed money, they get stopped out quickly. That's the only supply. There is nobody else selling their Bitcoins. Everyone takes it off the exchange, hides it in their wallet, and says, you're not having it. Much like we all do with gold. We stick it in a gold vault and hide it.
So how do you buy it?
So you buy it via, one of the big exchanges, whether it's Coinbase or Gemini or whoever. You transfer money from your bank account. You do your KYC as you would with a brokerage account or you would with a gold account. Same thing. It's not that complicated. And you just buy it. And then you decide to store it on the exchange, which in the past has been problematic because money has been stolen from exchanges. Or you can keep it in a hard wallet where you kind of own the keys and and you're the only person who can get into it. And those are the two methods.
So when we come back, I'm going to talk to you more about this, is how expansive is Bitcoin? I mean, can it be the money of the world, via micro Satoshis or whatever they're called? But I'm sitting there, I have so many questions about it, but I just want to blame you for making me rich. When you said there's a wall of money coming in, and I know something about you, Raul. You've seen the wall of money. I haven't, but I know you've seen it. So anyway, I want to thank you. We'll be right back. We're going more into people like you who are sitting on the fence right now saying, shit, am I in or am I out? And we don't make recommendations because that's not our job, but I just want you to understand the logic behind it. So we'll be right back with Raul Pell. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And today we have a very, very special guest. It's Raul Pell. He's a founder and CEO of Global Macro Investor. But I think more importantly is his Real Vision program. I was just watching your new commercial where we promote, you say you're going to democratize financial education. And I think that is sorely needed. So great job on that, because, I've been to your offices in New York, and it was like going to the studio. It's like, oh, this I've seen this studio so many times before. But anyway, Raul Pell is a hedge fund manager who retired at 36. Raul is a co-founder of Real Vision, and then he's also run a global macro hedge fund. And the reason I blame him for getting me into, he pushed me over the line basically, because I was pussyfooting around. After it went to 20,000, and then it dropped down, and it was this, and when he said the words, "There's a wall of money coming in," and as a hedge fund guys, they know what walls of money look like. Kim and I don't. We're real estate guys, but there's a wall of money. So we were learning a lot, and we thank you for sharing your wisdom.
Yes,
any comments, Kim?
Yes, and Raul, I'm just curious. You were a hedge fund manager, and you retired at 36. How did you do that, and then how did you get into the whole cryptocurrency and all that, what you're doing now?
Yeah, so I was lucky enough, I was at Goldman Sachs. I ran a sales business, the hedge fund sales business in equities and equity derivatives. I then ran a hedge fund. And my investment has always been in lifestyle. I'm not the one who wants to be the richest man in the world. I want to be the happiest. So I decided that I could probably create an income by writing macroeconomic research, the Global Macro Investor, because I'd been in the hedge fund industry for a long time. So I'd earned a lot of, I'd earned a lot of dues. So I knew that I could probably write for a living. And so it was a very expensive research service for the world's biggest hedge funds, which I still write to this day. And I moved to the Mediterranean coast of Spain and opted out of the rat race. Worked about a week a month and had a great time. But in that whole process, I was in Europe for 2008 and then 2012, when we almost lost the European banking system and the whole EU. And people came to me and said, you knew what was going on. And I did. I was the epicenter of the financial system. Why didn't we know? That was my parents' friends of friends. And I realized the media had let people down. And so I thought I had a moral duty to do something about it. I've made a good career out of this. And I thought I could educate people and help people and give them the tools that they need to navigate extraordinary times, because I knew these times weren't over. And here we are in truly extraordinary times, and it's still not over. And so people need to understand what's going on. And that's what Real Vision's all about. We even created an entire free crypto channel, Real Vision Crypto. And that's free because crypto is so important that it can change people's lives. You joke about you've made money, but it's real.
What is that? What is that channel?
It's called realvisioncrypto.com, and it's free. So anybody watching this, you can sign up there, and there's interviews with everybody in the space. It'll give you a chance to understand, how really monumental this shift is that's going on, because it's huge, and we can all make money from it, more importantly.
So I have a question. There's 21 million Bitcoin. Is it theoretically possible that could be the money for the rest of the world? Can it keep expanding out? I mean, I know that thing called Satoshis, but I don't know what they are. But can it keep dividing? Yes, well, it divides down to 8 decimal places. And the 8 decimal place is a Satoshi. So it's divisible, which means that it's expandable. So, you could theoretically get to 1 Satoshi equaling $1. I mean, that's a huge number.
The reality is we talked about before about this network effects with this, but it also applies for institutional money managers and corporate treasurers, because if they have it on their balance sheet, they're outperforming everybody else. So it encourages other people to get involved because they need to catch up. Then the market cap goes up. So it goes from 350 billion to $1 trillion. Now at $1 trillion, it means BlackRock can get involved. So they get involved and the market cap goes up to $2 trillion. And that brings in the sovereign wealth funds and it goes up to $5 trillion. And as it broadens out in its number of users, the volatility comes down and it becomes a more usable form of money. Right now, it's basically a store of value plus a call option on the future of financial technology, which is why we've got such this racy trajectory that it has. Eventually, that trajectory will flatten out and will look much more like gold, which is a stable store of value. But right now, we're at the exciting part where we get two parts of this, the store of value and the future of technology. That's amazing.
And one of the arguments early on, I don't know if it's still an argument today, is that, well, Bitcoin is not, at some point, Bitcoin is going to get too powerful or too much attention and the governments aren't going to like it and the government's going to try to shut it down. Is there any reality to that?
So currently the regulations are going the other way. You know, they're making it very clear that they want to regulate the exchanges, make it viable. What are you going to tell BlackRock once they've got it on their balance sheet? I'm sorry, we're going to ban this now. That's highly unlikely. But let's say all the IMF get together and said, this is destabilizing the fiat currency world. Okay. So then another country is going to say, oh, well, we're going to allow it. Let's say the Cayman Islands. Oh, no, come here with your cryptocurrency. So they attract capital. So that game theory means that if it's such a strong hard asset, somebody's going to accept it. Also, if you think about the game theory of central banks and their reserves, one of these Latin American countries who've always had problems with currency depreciation is going to put it on their balance sheet. And is going to give them a hard currency in their basket. And their currency is going to appreciate. And somebody else is going to look at that and go, we can do this too. And before you know it, it gains central bank adoption. So it's a really interesting path. And I think it's a probable path as well. Over what time horizon? I'm not sure. Let's call it 10 years that we start to see central bank government adoption at various levels. And then we'll see whether it really threatens the bigger currencies.
Right. If I could put it in really simple terms, is the problem with the dollar or any fractional reserve money currency is that you're incentivized to spend it. You know, and it goes down in value the longer you hold it.
Correct.
And so what that does is it causes people to spend money or get into debt as quickly as possible because the money is going down. Its value is dropping. It's not a store of value.
Yeah, and you can look at that in a number of ways. If you look at inflation-adjusted wages, median wages in the United States, they've basically stayed the same since 1974. But other things have got more expensive versus wages. So people have taken debt to fill that gap. So people feel there's something going on. They don't really understand it because it's not the dollar falling against the yen or the euro. It's all of them going down because they're all printing money. So that's why gold keeps stair-stepping higher over the years. It's basically holding its value and reflecting that all of the fiat currencies are going down in value. So I actually follow gold versus a basket of 27 currencies because that shows you what it's like as a world currency. And I think of gold as a world currency. Works perfectly because it holds its value as these currencies keep printing, etc. So, and Bitcoin works perfectly in that, but it has, as I said, the racy upside of the technological output.
So we don't give recommendations, as you know, because that's not our job out here. But let's say you have mom and pop and they've got a 401k and they got $100,000 in it. Would you ever recommend that somebody consider an investment in Bitcoin or Ethereum or something like that?
Yes, it depends what age it is and what you're trying to achieve. And right now it's difficult to put in a 401k because there's no ETF or simple vehicle. You can buy that, the Grayscale Trust, it trades at a big premium. But let's say you can find 20 grand yourself or 25 grand yourself. And think of it in these terms. If you lose half of your money, if that's too painful, don't do it. If you think I can lose 12,500, but I could make 200,000 or 500,000 over the next 5 years, that's the kind of bet that you have. So it's really going to enhance your portfolio. The younger that you are, the more you should put in it because the more risk you can take. The older you are, the less you'd put in it, but you might have some in because it's going to help offset other issues you might have.
And we were just having a discussion here with some of the members on our team, and the young guys were liking Ethereum, and older guys are liking Bitcoin.
Yeah, and that's narrative arc. So Bitcoin is an easy narrative because one step from gold, you kind of understand digital gold. Okay, easy. Ethereum is like the internet of money. It's like a platform. So younger people are more adoptive of the whole disruptive technology that Ethereum represents. Bitcoin does too. It'll have many of these attributes as well. But Ethereum is that. And I'm very bullish on Ethereum because I think the whole system is changing to this new internet of value. I think real estate will be tokenized. You know, we're talking about it here, for example, on 7 Mile Beach.
Say that again. That's something near and dear to my heart.
So real estate will be tokenized, and this is something great. So right now,
what does that mean?
Let me explain. So right now on 7 Mile Beach in the Cayman Islands is expensive apartments. The average citizen of the Cayman Islands can't afford to buy them. They're sold to Americans and some of the wealthy families here and Canadians and Brits and stuff. Now, you could tokenize it, which means you can have the recorded ownership, your fractional ownership that trades on an exchange. So I can sell my $5,000 investment in a $10 million condo to you instantaneously. What that means is you're a pension fund in the Cayman Islands looking after the general population. You can share in these projects that ordinary people couldn't do. So let's say you're a real estate developer. Well, you can now sell real estate, high-end real estate, to individuals. Because you're not selling one thing, you're not creating a REIT, you're creating something that's instantly tradable. It was kind of like timeshare was, but this is a real ownership, recorded ownership, that I own a share of the property that you've just built. And I can trade it with somebody else instantaneously for money. And that is a revolution.
No, you're stepping on my favorite territory here.
I know, purposely.
I know. No, it's because, I drive around and, Kim and I, our main asset is apartment houses. We have about 8,000 units. But then I look at the CMBSs, the Claire's mortgage-backed securities. They're in the office buildings and shopping centers and all that. So from your view, what do you see going to happen for office buildings and large shopping centers, given the information age we're going into?
Look, there is a secular shift going on. I grew up in the UK, and there was a massive societal shift, much like we're seeing in the US now, back in about 79, 80, 81. And what happened was we lost the steel industry, the shipbuilding industry, the coal mining industry, and the tin mining industry all in one go. And that never came back. And guess what? It's pretty difficult to retrain a 55-year-old steel worker into the services economy, for example. So it creates structural, rigid unemployment for extended periods of time. And those cities took a long time to come back. Many of them never came back. So I think the same is true. I mean, realistically, shopping malls, that game's finished. There'll be some in certain routes, but it's not really going to be there. So I think there's a structural shift coming. And my guess is you'll end up buying shopping mall, knocking them down and building apartments. Because they need apartments because this massive millennial population can't afford, there's not enough supply. They need to get into stuff. We need cheaper, high quality apartments for that huge population because they're still having to live with their parents. They're still in the renter economy. There's a bunch of things that can be done. So my guess is we'll be ripping up shopping malls and changing them to other things. Now, in terms of office space, who knows? The jury's out. And in stores in, let's say, New York City, I think the jury's out. I think young people will find that there's lower rents and they can create their own businesses and they can start the entrepreneurial cycle again. Changing some awful chain store like Staples and turning it into an artisan baker's and somebody's in control of their own income. Great. I think that's coming because rents will come down because the chain stores won't be there any longer. There is no point. But artisan stuff, yes. Shopping malls, no. And apartments, of course.
So, given let's say you have a crystal ball, if you are looking into what to invest in the future, what trends do you see that people may not see yet? What do you see coming?
Look, I think this cryptocurrency trend overall is bigger than people can yet get their heads around. It's currently, the whole space is about a $1 trillion asset. My guess is we'll be talking about a $20 trillion asset plus in the next 10 years. So, okay, we don't get many of those opportunities. The other long forgotten one is emerging markets, because the US has dominated so much this last cycle that nobody invests in emerging markets anymore.
Can you name an emerging market so people know which one?
India, right? There's ETFs trade on India. India has a phenomenal demographic, high savings rate, low debts. It's completely the opposite of the US or Europe in terms of how it looks structurally. The probability of making money in India over the next 10 years, extremely high. And if you look at the relative valuation of emerging markets, they're very cheap. So people have forgotten about these things, but my guess, if we come back in 5 years' time and have this conversation, everyone's going to be talking about the bets that they've got in India and some of these other big emerging market countries.
And then what about China? What's happening there with the...
China's more complicated. So A, it's got an aging population. B, it's got massive debt. But it kind of does know that it's got its structural problems with its banking system and the excess leverage, and they're trying to clear it out. So I don't know. It's not the one that I have a clear vision on. India, I've got clear opportunity. China, I don't know. It's a mix and match here. Maybe it's just Japan. We've had the peak, and it goes up and down with the business cycle for the next 30 years, which is what Japan did. It took a long time for Japan to change any of that excess debt dynamics.
So, this is my big question.
Go
If
for it.
they, what Japan did was they started buying equities. Is the U.S. heading there? They're going to...
Right now, they don't need to because equities are all-time high. Could Europeans do it? They don't need to because most of the pension system is in bonds. So the European society is bondholders. The US are equity holders. Equities are at all-time highs. The real reason to buy equities is you don't want to default on the pension obligations of the baby boomer generation, which is 76 million people. So if equities fall, let's say there's another catastrophe and equities fall 50% here and stay down, yes, I think they will, because you're going to rob all of the baby boomers of their retirement. That's already a problem.
Yeah, and then I've heard the other programs, you've talked about this pension crisis.
Yeah.
What final word on that? What do you see in the pension area for boomers? Because I'm the old guy here.
It's really serious because the pensions never made enough returns because of zero interest rates to pay what people think they're going to get to retire. And there's a big shock coming. So whether it's the state pension plans that are bankrupt or people's 401ks that just won't have enough money for them to retire. So they either stop spending, which is what I think is going to happen. So the whole US economy lowers like Japan did and Europe did. Or we end up with a pension crisis as everybody has to sell out of their equities at the same time. So they've got money to spend on their bills as they retire. I worry about, and many people talk about this, the expected future returns from the stock market is negative. The expected future returns from the bond market is negative and the credit market is negative. So that leaves you with potentially real estate if you find the right bets. And it probably leaves you with emerging markets, which are positive, and cryptocurrency. So people are going to have to navigate, and this is, again, why we started Real Vision, is people have to understand this. We have to take control of our own finances now. We can't leave it to some other guy because they don't actually care if we don't have the money to retire.
Exactly.
We can.
Exactly.
Ralph, thank you very much, and keep up the great work. I really appreciate it. The world appreciates.
And you guys too. You're doing great work as well.
But you made me a very rich man again, so I'm much more appreciative than you.
Still don't own enough.
Thank you,
So
Ralph.
thank you.
Fantastic.
And we'll come back with a final word. So thank you again, Ralph. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. I want to thank Ralph Powell. He's the CEO of Global Macro, but is also one of the co-founders of Real Vision, fantastic financial education program. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube, as long as we don't get deplatformed. And you can please leave a review with us. Also, we archive all of our programs at richdadradio.com. We archive them because repetition is how we learn. You listen to this program a second time, you'll learn twice as much. But more importantly, if you have friends, family, and business associates who are, let's say, not in the know financially, this would be a great program to start with because Raoul Pal's credibility in the financial world is solid, and he's a pure educator. And he's the guy that pushed me over the line about Bitcoin. So anyway, it's not a time to be complacent, is what I'm saying. So that's why we're the Rich Dad Radio Show. Any comments, Kim?
Well, that was a fascinating interview, and it was from the big picture down to Bitcoin. The most important thing he said was at the very end of the show, he said, he does what he does because people need to be educated, and nobody's going to look after your money more than you are. You can't put it into somebody else's hands and expect them to care about you. They care about themselves. So it's so aligned to the Rich Dad message of taking charge of your financial life. I love that, and he's a heck of a smart guy. Oh my gosh.
Yeah, I've listened to him for years. Like I said, I went to his office up in Manhattan when they the old Real Vision, when they originally started, and it was a nice set. It was like a TV studio. But I've always wanted to interview him, and they provide fantastic programs. I think they put out 20 programs a week. So please listen to Real Vision and Raoul Pal. They bring in some very, very smart people. This is the difference between going to school and listening to Real Vision. Is the trouble with academics? They're academics. They don't operate in the real world. And the people that Raoul Pal brings in, and a lot of people on these YouTube sites and all this, they're people who are operating in the real world. Nothing wrong with school teachers because my whole family are school teachers, but they don't operate in the real world. They operate in the real world of academics. So anyway, that's why I'm very, very happy to have Real Vision on, Raoul Pal, and all of the other guests. So thank you all for listening to the Rich Dad Radio Show.
Thank you.